Good morning, trade pros, and I hope you're having a great day so far. A slight camera adjustment necessary, so bear with me. That was very slight. I hope you guys are having a fantastic start to the day. It's the middle of the week. It's hump day. Do with that info as you will, but let's kick it off. We got an exciting morning market update today. We're going to talk about a lot. I want to kick it off by saying, if you ever wanted to get some insights, and if you're on X, I'm on there and I'm a lot more active, and the handle is at George Papazov, GeorgePapazov. I used to say Zed. It's a very Canadian thing. Zed sounds like a villain. Who the heck is Zed? But yeah, send me a follow there. Just a quick reminder, I'm building up the activity there as well throughout the day in the morning, leading up to the morning market update. And let's kick things off. Equities this morning are slightly higher. They were before the Oracle news. All right, and still holding the gains, mostly firmer following the European strength in the overnight session. All right, Nvidia is a stock that's having a lot of impact. It's under scrutiny. House China panel warns that H200 chip sales risk U.S. advantage. So there's going to be, they were approved for sale. Now there's some house insight into it. So we're watching for that. All right. Tech is slightly outperforming on AI, OpenAI, and Amazon news. The news there was that they're in talks for $10 billion plus in funding using Amazon's AI chips. All right. That was positive in this morning session. All right. Amazon that's a bullish thing for AWS and their AI infrastructure unit and division at Amazon. So it's a good news story. Another 10 billion here, another 10 billion there. Pretty soon we're talking about real money. So the circle of funding continues between AI and its partners. All right. But then this morning, just before the 9 a.m., we got news about Oracle, and we just can't catch a break. Oracle's 10 billion Michigan data center that was being built is in limbo. All right, after funding talks stall for the capital to build it. So that kind of put a damper in it. Oracle was up. It was following the overnight European session strength and pre-market strength in the U.S. It was up pre-market, and now it's down over 2% in pre-market trade. So Oracle kind of spoils the morning party here for the U.S. session. Today we have some Fed speakers. John Williams, who's the Fed vice chair and a permanent voter because he's Fed vice chair, is speaking. He actually already spoke in line with what you would expect him to say. Then we have Christopher Waller today. He's a potential Fed chair candidate under scrutiny. He's speaking. And we have Raphael Bostic, who's a 2027 voter, speaking. And what to watch for in any Fed speak for the rest of the day is any pushback on dovish pricing or comments on inflation. And the reason comments on inflation are important is because tomorrow we have CPI. So if any of these Fed speakers pin any kind of relevance on the inflation number tomorrow, then it just gives it even more significance and more importance, as if it's not important enough. I would argue, and I don't know who I'd argue with, because most people would agree, but if we did find a fool to argue with, I'm just kidding. If you have the counter viewpoint, it's just a joke. I would argue CPI is more important than the jobs data, okay? Because CPI is directly tied to the mandate of the Fed. And so tomorrow we get CPI. It's the big one. We're going to get the latest data tomorrow for inflation. It's going to be pre-market at 8:30. All right. Market is currently priced for continued disinflation. Disinflation means the number is still positive. There's still inflation, but there's less. So there's less inflation, but it's not negative. It's not deflation, which is a negative number. Disinflation is a decrease in the positive inflation. So that's what's priced into the market. Any upside surprise in CPI would put immediate U.S. dollar strength into the market, all right, and significant pressure on equities, especially the growth sector, and any tech names would see a lot more of the carnage there, and it would push the 10-year yield for sure lower as the Treasury complex bids. That's tomorrow, okay? And the reason I talk about it today is because I'm not going to be able to talk to you about it tomorrow before it happens. So 8:30, watch out. I would take more defensive positioning going into that report. If you're thinking about adding, or if you're thinking about selling, adding is not the right time now. We'd be more defensive, and taking some off the table would make sense if you've been thinking of taking some off the table anyways. All right. In other news, we're about to lose one of the biggest buyers of equities, stock companies themselves. All right. there's a critical factor that's emerging here, and it's very important. And the corporate buyback window is going to be on a blackout as of around December 22nd, when roughly 40% of companies in the S&P 500, that's a lot of companies, will enter their blackout periods. What does it mean to be a blackout period? It means you're not allowed to buy back your own equities. All right. Goldman Sachs says the buyback flows are already slowing down as this window approaches. I mean, it's the end of the year, it's holidays. I could see a lot of people, leaving the desk early and saying there's a buyback blackout coming up. Great. I was going to be out of the office anyways. File, exit, shut down the computer, power off, and you're gone for the year. So a lot of companies are opting to go into blackout even earlier and seize their buyback operations for the year. All right. Which is a very important and critical buyer in the stock market. If you don't know this, the stock companies themselves are the largest buyer in most cases of their own stock and their buyback programs that are authorized starting the end of the year, and that gets blacked out towards the end of the year, and there's blackout periods with earnings and all this stuff. But that part of the market is fascinating to me, and a big market mover some people overlook. All right, median short interest is across individual stocks, though, remains very high. And cash levels for portfolio managers, according to Bank of America's Fund Manager Survey, that's very popular on the street and gets a lot of attention. All right, cash levels have dropped to all-time low. Well, what does that mean? What does it mean if your cash drops to all-time low? It means your cash has been put into equities, into your portfolio mandate. Your cash has been spent. Therefore, you're already long. You're already positioned. And now we're losing buybacks. They're not going to be buyers of stocks. Now we got portfolio managers at all-time low cash, so they don't have money to buy anymore. All right, so who's going to be the next buyer to keep taking this thing higher and to push the Santa Claus rally into existence? That's the big question. And the answer to that is it's going to have to be buy stops. All right, we're going to have to start hitting some buy stops pretty soon, or the year-end optimism is going to have to rise to a level above which it is, and people start buying stocks willy-nilly without looking at it, and it's going to have to be retail. Because according to Bank of America, fund managers have record cash flow on their sheets, on their balance sheets, but that's just Bank of America. It's a representation of a small segment of the market, but it's a very key data point that we're looking at. All right, and for that reason, the Santa rally optimism is starting to fade, and you might actually get a lump of coal for Christmas, but that's yet to be seen. All right, these are the trends that we're tracking. And the Santa Claus rally officially starts next week on Monday. It's the last 5 trading days of the year, plus the 2 days of January that are the quote-unquote Santa Claus rally. It's often cited as a Santa Claus rally, and people use it for generic reasons for their own timeline. Like it's September, Santa Claus rally, or it's December 1st, the Santa Claus rally should be happening. But this was a trend started by the Stock Traders Almanac. Jeffrey, I forgot his last name, really cool dude. Great almanac. I used to purchase them every year, and then I didn't because I just get that info digitally. But the point I'm making is Santa Claus rally is still yet to come. It hasn't officially started. It's not off the table yet, but these are the factors affecting it. All right, here's some gamma levels. This is your gamma report. So the way these gamma reports are calculated, I've switched the approach because I was doing it the lazy way. I'm going to be honest with you. In the morning time, the time is precious. I used to wake up a bit later. Now my schedule is adjusted. I have more prep time to go in. And I've adjusted how I do the gamma because this is the more correct way to do it. The last way of doing it was the rough way. The real way you should be doing this, and it gives you slightly different info. A lot of times it's the same. Is you should be looking at SPX options, all right, and doing 1 day, 0 DTE expiry to the next day. A lot of times those two will be very similar. All right, finding the options level, and then adjusting the cash index to the basis of the ES spread, right? Sounds simple, right? All that basically means is pull up a quote of S&P 500, the index, the cash index, pull up a quote of S&P 500 futures, all right? And do the math, subtract one from the other, add that to the SPX level, whatever the difference is, and that's your ES level. So the ES levels for today, 69.05 is a big one because that's both a call wall and a put wall. There's a lot of activity around that one expiring today. So I think if we get around the 69.05, that's a pin level for the S&P. So once you start getting up there, dial in the expectations. You're probably not going to make too much moves above that. We might just dance around and fill it in with some volume. All right, but 69.05 is a really big one, S&P 500 futures. Then on the upside, you got 69.55, which is 50 points away. That's up there. All right. That's what we're watching. Now let's turn around and build out our trading plan, for goodness sake. That's the morning market update. A little more succinct, a little more trading focused, and this is what I'm committing to giving you for the rest of this year. And then next year, I'm going to go back to crappy ones. Just kidding. I obviously carry the momentum forward. My sleep schedule, thankfully, is adjusted. I'm up so early that I have a lot of time to play with numbers and the markets. Very suspect statement. Let me just turn around before I get in trouble and open up the charts. That right there would be a great opportunity when I turn around for like a sponsor cut in. As I'm turning around setting up, this episode is sponsored by Advil. If you're trading like a maniac and you have a headache, order your Advil today. Good morning, Marco. Prokutz, good morning, sir. Mikey, good morning to you as well. All right, guys, let's talk about things, all right? Because I am a big fan of story. Everything has a story, and if you could read the story of the market, you could get yourself in a good position for the trade of that story, okay? We got a bunch of lines and boxes on this chart, and these are my lines and boxes, but I'm going to show you how I use them to build context so you could draw your very own lines and boxes. Yesterday's price action, we're going to start there. We opened in a bearish structure, all right? And the initial move rallied to the prior day high of 66.80 half. So here's the open, all right? This is the open. We rally up to 66.80 half. That forms the day session high for the US. All right, this is the S&P 500 futures. We are now on the H contract of January 2026. Do note that. All right, we are on EPH 26. So we go out there and form the high at 80 half, and then what we see is rotation. But this pink box that we have in here isn't just pink because I got tired of doing gray. This pink box is aggressive market selling based on order flow. This is an order flow level. This is where the big boys came in. They were swinging, and they were on the downside. And OF stands for order flow, not OnlyFans. Guys, get your mind out of the gutter. All right, we're trading. So on the downside from here, this immediately pressed equities and gave us the first high probability trade in the room, and it was beautiful. Worked out really well. And we sold off right to the support level. You can't make this stuff up. The gray box. And if somebody's saying, well, you just put that on today. No, I didn't. Go look at yesterday's update. Aha. All right, so we rally into this first support and rally off of it for buy stops. Our team caught the buy stop trade here. I wasn't on board. I was on the earlier short. And then we just kind of consolidated a little bit into the early afternoon where we then dumped that level but couldn't hold momentum below, and we reversed for the day. All right, then we got a series of higher lows and the big rally going into the closing bell. But that put the prior day low at 68.17 half. So the low is in at this point on the day in early afternoon. Okay, so what is the story telling you? The story is telling you we started early in the morning yesterday on bearish trending, and we extended that bearish trend, and we caught the exact moment based on order flow where the positioning should be bearish for the continuation down. We skipped the risk, and we got in for the reward. So far, so good. Then we rally up, all right, right into the opening range, and we pull back to set the daily cash close at 68.55. So the session huffed and it puffed, but it closed slightly below its opening range, and that's not a very bearish thing. Despite the fact we had bearish extension throughout the day, the close wasn't bearish. The net total wasn't really that much of advancement for the bears. It's your first sign right there that the bearish price action may come to a close is when the closing price of the cash session isn't too far away from your open for the day, despite downside. So we erased a lot of the losses throughout the day. So overnight, what happens? Overnight, we sell off down to the 35. We form the overnight low, all right? And again, touches this gray box that's based on order flow levels and also delta and volume profile stuff that I look at to build these larger, cuter, nice levels. So we rally upward, all right, for overnight price action. Then we saw really big buyers on the aggressive side step in at 68.48 to about 68.52. That's the green box. When you see green boxes, these are aggressive order flows on the long. Purple boxes, aggressive order flows on the short. So offer lifters on the long, bid hitters on the short. So, okay, we have these two zones. This buy zone is good for a really big extension upward overnight, and everyone is happy. And we just comb through this order flow selling box like it didn't exist because those positions aren't relevant anymore. right? That's from the US session. In fact, after the morning market updates, that level gets deleted. So here we go. We set the overnight high 82.5 right above the prior day high. So now what's the story telling you? The story is this. Yesterday, we opened in a weak bearish structure. We extended the move lower, but then reversed it. And overnight, we continued the reversal until we broke the prior day high. That's bullish. That looks good. Things are in good shape for a continuation upward. But here's where it gets interesting for me. All right, the overnight strength is going to meet really big daily resistance up at 92. And we know we have our 95 level slightly above from the gamma positions. So 92 to 95 caps your upside movement. Like the easy money is going to be up to that point. Okay. We are long as of yesterday's failed low. That's bullish structure if you're looking really near term, but longer term, and I'm going to delete all these markings and zoom out for you a little bit. Longer term, guys. Well, longer term, it just doesn't look that bullish yet. All right. That's all I'm going to tell you. It looks like this could be the formation of a reversal pattern. Right, but to find that out, we're gonna have to go bid 92 and hold that and get some buy stops. Go to 05 and hold that. So above 92, and this becomes my flip zone, is where I get confident on the long. Below 92, all right, I'm gonna look for long opportunities on pullbacks. All right, but I'm gonna be watching very closely on the open for the speed of the orders. I'm gonna be reading the auction in real time for any clues in the first 15 minutes or so when the big orders start hitting, and seeing what kind of tape we get, because it's easy to look at the price action overnight and confuse yourself and say, this is bullish, I'm looking to buy the most recent momentum, but that most recent momentum might be over. It might be conclusive, especially now with Oracle. So before you get too head spun about finding a place to get long, zoom out and remind yourself that technically we haven't got a higher high yet. We're flirting with it, but we haven't. And the structure really flips above 92. Above 92, it's going to be more of an accelerated upward move in the ES market. Below that, buy with caution. And, I'm still favoring the sell side, to be honest with you. Although I like the long, I think you have to give respect to the larger trend structure. And it's a dangerous moment here because it's short-term longs meeting structure shorts. There's going to be a fight. There's going to be chop. There's going to be volatility on the open. What I'm watching for is not all the trades. I'm watching the big trades. Where will the smart money stake out their position? Where will they bet the continuation will happen? Will it be bullish? Will it be bearish? And then that was what's going to paint the picture for the long or short opportunity. So if it was a cleaner context, I'd tell you buy weakness or sell strength. But it's a little more of a challenging day. And if you don't like it, think about it this way. It's Wednesday, December 17th. You could very easily say to yourself, I'm done for the year. All right? And the year's getting sloppier. We talked about this with the team. The year's getting more challenging, a little more sloppy. Things are more pressure is starting to build out because you got to close positions for year end if you're a fund manager to send a statement to your clients. All right? And the year end one's important. It's the most important statement you're going to send. So the pressure's on. And these are pressure for strong-handed participants. Doesn't make sense for us to continue picking up pennies in front of steamrollers this late into the year. My answer is going to be no. And in fact, Friday, December the 19th is going to be our last morning market update and our last trading day in the room. Monday, December 22nd, is going to be our last trading room day for the year. But in that last trading room day, I'm going to present you guys a 1.5 hour, or I'm not putting a time frame on it because that's not the value, but a 2026 plan and what I do for myself every year to start the next year. So it's going to be planning, it's going to be psychology, it'll be trading strategy and review and inner reflection and improvement. So if you want to get on board that, all you have to do is subscribe for the trading room, check it out. It's $219 a month. Jump in there and see what we're going to do on Monday and take advantage of that workshop. Trust me, it's not a regular thing. It's a year-end / next year kickoff strategy session. Jump on board. And I shouldn't tell you this, but if you're really not satisfied with what you got, you got a 14-day money-back guarantee. So you get it for free. And that's if you're not satisfied. All right? I promise you, you'll be satisfied. I'll see you in there Monday. I'm going to see you there tomorrow at 9 a.m. I'm going to see you on Friday at 9 a.m. And then that'll conclude our morning market updates until next year. And yeah, the workshop is going to be on Monday with our trading room. It's going to be our last trading room day is next Monday. Other than that, this is what I got. You guys have any questions? William, good morning, brother. Prashant, good morning, sir. Love y'all. The usual suspects. I'll see you guys in the trading room. It's part of the morning market update and part of our room. I'll see you guys in there. I appreciate you. Have a great rest of your day. We'll leave it there for today. And we got more action coming your way tomorrow. And remember, follow x.com/George Papazov, Papaz, Papazov. Follow me there. I got some good stuff coming your way there, and I would love it if you guys join me on X.